What's going on, SPAC chasers? It's the Dividend Bloodhound here with another investing episode. Today's episode we're talking about Tattooed Chef, and I'm bringing you an update on the shareholder vote on whether the merger, amongst other things, should go ahead or not. Now, if that sounds like something you're interested in, then do stick around after the intro where we'll be going a lot more in depth into this information. That being said, if you're brand new here, then do please consider hitting the subscribe button and even ticking the notification bell as well. And if this video brings you some value, do please hit the like button as well. It helps me out and it helps the channel out massively. That being said, without further ado, roll the intro. Hey again guys, welcome into the video. So today we are talking about the Tattooed Chef FMCI vote and how it has progressed so far. Now, over the last week and over this weekend, the vote has been requested from shareholders to approve the merger, of course, which a lot of people were waiting for. Now, the merger actually got pushed back until the end of October due to the company FMCI not actually receiving enough votes to push the merger through. Even though all of the shareholders that voted, 99% of them actually voted to merge and get it sorted, they didn't receive enough votes from enough shareholders to actually make that happen, and the threshold was 65%. Hence a mini sell-off, and people started to just panic just a little bit about the merger and the deal potentially not going through. However, over the weekend, and after a concerted effort and a publicity effort from the company, this vote and the amount of votes now needed has happened, and it has gone through, and the vote has been passed. There has been a concerted effort even over here in the UK with Trading 212 investors getting in touch with Trading 212 to get their emails and get their vote in, because they had the right to vote for this merger to go through, basically voting for the stock to rise in share price. As I've already mentioned, the SPAC has been extended until the 30th of October now, but that has all been nicely tidied up. The vote has passed and the vote has gone through, so it's now just a waiting time, and I expect, as well as many other investors expect, that the share price should nicely tick on and gain in value as we approach that date, especially as some FOMO takes hold. Now, in the last week or so before this date, there was a mini sell-off up to as much as 20% off the share price, and that would have been an ideal time to buy. However, currently speaking, it is sitting nicely and it is still a good time to get in. Moving on nicely from that, the CEO actually said, Jay Clayton, actually also sparked yet another small sell-off when he suggested that the whole SPAC process and de-SPACing should actually be regulated, because there's nothing at the moment stopping companies not revealing the true amount of information and the amount of information that should be provided from the company, so investors and the public at IPO know what they're actually getting involved in when this sort of merger and SPAC happens, and as we de-SPAC going forward. He actually suggested that there should be some regulation around this, and that actually spooked some investors. But in reality, that's actually quite a good thing to have some regulation there, because as an investor, you want as much information about a company that you're going to invest your hard-earned cash in as possible. Surely that is an important thing. So why this spooked investors, I really don't know. But that all being said, it has now recovered from that. It was only a minor sell-off, and then people actually started to realise that it was actually more of a good thing than a bad thing, and the price subsequently recovered. The bull case on this company then is absolutely enormous. So going forward from the merger, I am expecting anyway, as well as numerous other analysts and investors are expecting further price growth. It's actually one of the favourite SPACs, according to a recent poll on Facebook, of most of the SPACs that are out there to buy into at the moment. This company actually came out on top, even beating Hyliion in terms of how much people are going to hold it in the long term after the company has de-SPACs, which may surprise some people. But when we get into having a look just how far this company could go, it is perhaps a little less so shocking and a little less surprising after we get into that. Chris DeMath Jr. actually ran this poll on Facebook, and the reference to the article is in the description below, so I'm actually going to place the credit somewhere else for that one, because that wasn't my doing. I've just noticed that it is a really good poll of a considerable amount of people. It's actually really good information to actually get out there to other investors. This SPAC, Tattooed Chef, actually figures really strongly. So when we approach the date of the merger and the original investors can sell off or redeem their warrants if they want to, the strength of a SPAC will actually be discerned on just how many of those investors sell off and cash in on their investment. Now, a lot of the times that is a possibility. Obviously they've already made money, but if they hang around and none of them actually redeem their shares, that shows a great faith in the company and the fact that they expect to make a hell of a lot more money going forward into the future. So the lower the redemptions, the better and the stronger the SPAC actually is. Now, as we get to the merger date, SPACs and Tattooed Chef in particular this time will make a prime target for the shorting investors that are out there in the wider stock market. They make prime opportunities because people expect a pump and dump situation where there's FOMO all the way up to merger date and then a sell-off just afterwards, just like Nikola did. And well, Nikola's nowhere to be seen now because that company is a bit of a joke, to be fair, but I digress. Most people expect to sell off after merger date, so you've got to be aware of shorting investors getting involved in that one. But if the company investors, original investors, don't redeem their shares, that will help the company massively in the longer term. Another strength to Tattooed Chef and FMCI is that they have an extremely experienced sponsor team. Co-CEO David Boris has completed 14 SPACs in 13 years. 11 as an investment banker and then 3 as a board member of the SPACs themselves, which is testament to the experience. So it's really building the case for having faith in this sponsor team. The best way to profit out of this SPAC Tattooed Chef at the moment is to buy in if there's any dips on the way up to October the 30th and then hold on or sell them off just after the merger date as the shorters get involved and take your quick profit there. Or you could buy now if you've got a long-term view over the next couple of years, because a lot of people expect this share price just to continue growing and start taking the same sort of shape as Beyond Meat in the longer term. Remember, there is risk in SPAC investing. There is always risk in all sorts of investing, but that is particularly important right here because the warrants that you buy before the merger and before the IPO kicking off properly are actually worthless unless the deal is done. So you could lose all your money if the deal for whatever reason was to fall over and not go through. However, most people and most investors expect, especially with the vote now passed, that this is extremely unlikely to happen and that this going forward, the company is going to continue on its path going forward and carry on just as normal after the merger date and continue making plenty of revenue and plenty of profit and continuing to grow. Current share price is approximately $25.79. I got in on this share price quite a while ago, so I'm up 70% currently, which I think you will agree is a pretty good return, and I'm undecided yet whether to sell off at the merger date and cash in my profits or continue to hold for the long term, because I do genuinely believe that this company could be the next Beyond Meat. Share start price was approximately $12.50, and as you can see, that has more than doubled since it actually started off, so that is a healthy return on your investment. And talking on doubling up, if you compare quarter 2 in 2019 to quarter 2 in 2020, Tattooed Chef's revenue and net sales has gone up 113% in that time period, which I think you will agree is absolutely fantastic in just a year. So you're really starting to see the amount of sales go up exponentially. This timeline you can see here is just showing the sort of growth that Tattooed Chef has gone on. in its short journey so far. As you can see, it's really growing nicely as the Tattooed Chef brand actually gets involved with Itella, and then from there the curve is almost going practically vertical to the moon in terms of its revenue increasing. It's almost, yeah, it is literally vertical, so that is really something quite special, and they can tell that they're onto something good. The Tattooed Chef is a great brand image. It looks really good where you compare it to a lot of other food companies, to the point where it's almost cool to get involved and eat this food. That sort of branding is very powerful in both the stock investing world and to consumers of the product as well. And I've had a look at some of the food and it really does look absolutely delicious. In conclusion then guys, I think Tattooed Chef and FMCI is an absolutely fantastic company. The deal can go through with 75% redemptions against it. However, this does seem unlikely, and a lot of investors out there expect there to actually be close to zero redemptions from the original investors, which is tantamount and testament to the great future that this company is expected to have in the next few years or so. In terms of monetary value, the company has $200 million in a trust, and they only need 50 million of that to remain there after the redemptions for the deal to go through, and that is definitely expected to happen. There aren't many people out there at all that expect that not to be the case. This has the potential to be a fantastic buy opportunity for this company when you compare it to how far Beyond Meat's going and the sort of cult following of investors and consumers of their products that they've got. Getting in at this price at near $25 will seem incredibly cheap in a couple of months even, and going on to years time, when that share price could potentially be well above $100, just like Beyond Meat has been. In fact, I believe Beyond Meat went above $200. Now if you got in on Tattooed Chef at $12, $13, $14 a share, and then you end up selling at near the $150 mark, that is an absolute incredible return on your investment. And that's what I'm considering doing with my shares in my position, that my average share cost is approximately $14 or $15 a share. Of course, do your own research guys. I am literally just a guy on the internet with a YouTube channel. It's done enough to tick my boxes, hence why I'm invested in the company, and do believe it's a great buying up going forward. But always can't stress this enough, do your own research. And that nicely brings us to the end of today's video. I hope you've enjoyed it. I hope it's brought you some value, and if that is the case, do please hit the like button. If you've stuck around here to the end, that's absolutely great, and do consider subscribing as well so I can see you in yet another investing episode. Take care, and I'll catch you in the next episode. Bye bye.